So inspired by wanting to build and create an alternative investment business that aspires to attract foreign and local investors looking to participate in the Africa Rising narrative, Alt Capital Partners describes itself as an adaptive and responsible investor, with a big why including creating compatibility between capitalism and sustainability, rethinking growth and sustainability, change, development, and money management, helping those that are currently underserved, and creating disruptions while making real social impact through their investments. And for the conversation today, I am joined by the Chief Executive Officer, Ben Kodisang, Chief Investment Officer, Tumi Mokhothu, and Chulu Nomlomo, who is the firm's Development Director. Thank you for your time this morning, gentlemen. Ben, I think let's kick off this conversation with you as the founder and the CEO of the firm. Your start back in 2008 was considered quite ambitious. Can you give us a little bit of an update of where the organization is right now, and just an update on the structure of the group, especially coming out of COVID?
Thanks, Ntokozo. I guess 2018 were brave times for us. We decided to jump off the corporate bus after many years of privilege in working with great institutions, and we started Alt Capital Partners. So at the time, we saw the amended changes to Regulation 28 coming, which is effectively to increase the allocation to private markets as South Africa, to support South Africa's reform. So we set ourselves up then as a specialist investment business in private markets. So we were quite ambitious then, wanting to do economic infrastructure, property, and private equity. And over the last 4 years, we got to narrow and focus our ambitions somewhat. So Alt Capital Partners is now the manager of Reimagined Social Impact Retail Funds. So we focus on convenience retail centers in rural areas and townships. And we have a passive holding in an infrastructure business called Bayeka, which is outside of Alt Capital. So those are our main activities in terms of Alt Capital Partners.
And I think, Tumi, this is the place that I need to pull you into the conversation. Can you tell us a little bit more on, the investor proposition of the Reimagine Fund? What are some of the challenges that you've encountered in the capital raising process? But what are also some of the things that you can say you're really proud of what the fund has been able to achieve?
Thank you very much, Ntokozo. So, hey, you've hit the ground running, straight to the difficult questions up front. So I think, as Ben mentioned, I mean, our key proposition is that we're offering a route to market for investors looking for access to township and rural assets. Given our experience in the space, I mean, I've been in the markets now for 17 odd years. Ben has been 25 plus years, and Chulu is over 15 years as well. So I think what we bring to investors is a solid team of individuals who've got experience in the sector that they're looking to that we're looking to invest in. And the nice thing about our team is we've got such varied experience. I mean, Ben comes from an asset management world. I come from predominantly a banking world, and Chulu is a property developer, if there is such a thing. It's interesting that he's seated behind a desk today. Normally, you'd find him on the road, running literally the breadth and depth of South Africa. So firstly, I think that's quite important to understand what we bring to the party. I think it's quite unique in the way we've put our team together, which has significant value for potential investors. So that's the first thing. So in terms of the investment proposition, then we still believe there's significant growth opportunities in the township and rural areas, specifically in convenience retail. So we've seen over the last 2 years during peak COVID, how this sector has held up significantly better than other sectors within the property space. I mean, the thesis itself makes sense, right? So where there's still areas that are significantly underserviced, and people to a great extent can get to the properties to do their main day-to-day shopping within a walking or within a relatively short transportation route. We still think there's significant growth opportunities in that space. So firstly, we're targeting a need that we see as being there to be fulfilled. We think we're bringing together a team that can meet that need and exceed during the period. And then to answer your last question, I mean, how the challenges that we've had putting this fund together. I mean, Chulu and I, our paths crossed probably, 12, 13 years ago in the sector. And about 5 years ago, we decided to put our hands together and start building something together. I mean, it's taken us a very long time to put a business together such as this. And just over 2 years ago, then our journey with Ben then started to put out ourselves joining the alt team, and now being the three of us then ultimately leading the proposition going forward. I mean, a 2 year, in our instance, a 5 year window, in alt's instance, it's been over 4 years of looking to put a business together. Is a very long time in an entrepreneur's life. So on the one side, it is challenging. It is challenging to raise capital. On the other side, of course, while you're raising capital, you're also looking to build a pipeline, because investors will ask you the same thing. I mean, where's your pipeline? Show us your pipeline. So on this side, you're putting together a pipeline, but that pipeline also sellers of either raw land or brown assets, as we call them, need to know that you can deliver within a relatively reasonable amount of time. So it can't be a perpetual instance of we're happy to sell assets across to you on the wish or hope rather that at a point in time you'll be able to raise some funding in order to conclude the transaction. So it's a fine balancing act between, on the one hand, raising capital, which is very difficult, and on the other hand, also, in order to raise capital, you do require one thing. One of the things that you require is a pipeline, an executable pipeline, because investors don't want to put their capital into teams that may not be able to deploy it and within a reasonable amount of time. So when the capital lands, how soon can you be able to deploy it into value enhancing sort of assets? So on the one side, you're always working towards that. So I think that's probably the critical challenge that we come across on a daily basis. But having the gray hair, I think for me in particular, I mean, I'll say having the composition of team that we have does help. I think if I was pursuing this journey by myself, I'd be insane. But if I was pursuing this journey by myself, we wouldn't be having this conversation today, because there are so many ups and downs along the path. When you think you've made a lot of headway with a particular investor, something changes. I mean, we were quite advanced with our raising process in 2020, and then of course March we were locked down for 4 weeks. Over 2 years later, we're still sitting in this process. So naturally, appetite changes, risk changes as well from an investor point of view as well. So the journey has been colorful, but we're still here. Hopefully, I've answered broadly what you've asked for.
Definitely, Tumi. And you kind of take me to Chulu's next question a little bit, because with everything that you're saying around the opportunities in the township and what investors are looking for and that kind of thing, it almost sounds, one would say it's something that a journalist could write, the business journalist. But when you look at the nitty-gritties of entrepreneurs looking for real investment, opportunities of growth, aside from the opportunities of the mall being close to you and that kind of thing, Chulu, bringing you in, just in layman's language, what are some of those retail opportunities that Tumi is alluding to, that investors want to see that pipeline in the township, in the rural areas? And I think this is especially more so when we see kind of the unrest that comes out of those communities, high unemployment, and all those kind of socio-economic issues that we do have in South Africa. For entrepreneurs, really, what are those opportunities that are there in rural areas, in township areas that are waiting to be explored, that investors are looking forward to pouring some money into?
Thanks, Ntokozo, for the question. Sure. I thought Tumi had the hard question, but it seems like mine is harder. Listen, I mean, at the end of the day, there's always opportunities in the rural areas, in the sense that in suburbia currently, as most of you probably know, that we are very overshopped. I think South Africa is one of the most overshopped country in the whole world, actually. However, South Africa is still presents itself with pockets of opportunity, especially in the previously disadvantaged areas. That will be your rural areas in the townships. Okay, barring some townships like Soweto and the likes, which have been a key focus for politics and the likes, hence some of the developments that are happening. However, if you start going and driving out into the rural outskirts where there's no water, there's no roads, however, there's critical masses, densities, those people are traveling heavy distances in order just to do their basic shopping, bread and milk. I'm talking about bread and milk issues here. So effectively, they don't have a rand that they can stretch a long way. So you need to kind of bring that shopping back to them in order for them to be able to spend more money on their baskets. So that's effectively what we're looking at. And as Tumi has mentioned, is that I think opportunistically our paths crossed with Ben, in the sense that we had been walking this road of looking at development opportunities in the rural areas for quite a while before we even crossed paths with Ben. And we had managed to actually create quite a credible pipeline of opportunities, because our investment thesis had always been that we're going to go from the big shopping center, because that becomes unsustainable over a period of time, considering where South Africa is in terms of the economic times. So we're starting to focus really on the niche, smaller assets, and also focusing in terms of bringing in your local content in the investment of those assets, not necessarily just to build a shopping center, the money goes out and that's it. Our investment thesis had always been in terms of how do we create value? Do we create wealth for the people that live in and around those areas that we're operating in? And that's effectively what we've managed over the time. And luckily we met an old head like Ben, who's the clever guy who then brings in all different things that assist us in our process. So what we've managed to do is that we've managed to assimilate ourselves with the communities that we're working, meaning that from a land perspective, we're able to educate, and we're not just people that go and develop in areas and we're not leaving the knowledge behind. In actual fact, when we engage with people, the first point of call on the land issues is that we educate them. You've got options. This is how you can create wealth if you're looking at creating long-term wealth, because most of the people that we run into are either people that either have land, and currently in South Africa, the land question is quite critical. And it's mainly Black people that have got land in strategic positions where we could have easily gone to them and offered them 10 rand for their land without necessarily giving them how they can make the land work for them. And I think that's the other question that's being asked currently, is that, yes, fine, you guys want land, then what are you going to do with that land? Are you going to be productive? And we're saying, guys, in actual fact, there's people out there like ourselves that are willing to educate, number one, bring investment, number two, and bring high quality investment at that in some of those areas, and make sure that the people and the areas that we operate in, those people benefit maximum. And I'm talking because not everyone can be an entrepreneur. However, we can always try to bring in people into that entrepreneurial cycle so that everyone benefits in the value chain. There'll be those that benefit more than others. However, at least you're not necessarily extracting so much out of those areas. And I think the most important thing that what we're doing in these communities is that we're bringing in services that are not there. So as Tumi has said, I think I drive a lot in the length and breadth of this country. Unfortunately, I can't afford a private jet. So maybe in Ntokozo, I understand you might have one. Maybe you can just give me a lift one of the days. But if you drive these areas, you actually start realizing that there are no services. I mean, currently we've got a live site that should be going live in the next 2 months, where effectively from the sewer right up into water, we have to put in ourselves. And that just doesn't benefit the center itself, benefits the greater greater community. And we've even gone at length in the current in this center, where now we're even bringing elements that are dealing with environmental, this whole green economy now is the new thing. We're starting to bring in evaporation ponds, whereby we'll be cleaning up the wastewater, et cetera, and those are the clever guys. We work with engineers as well. So also, by bringing those elements that are not just purely focusing on the shopper coming in and putting in their money, it starts bringing a different element in terms of introducing the people within those communities to different opportunities that they could potentially tap into, because we don't just parachute people in and parachute people out. We marry them with the expertise and the skills. And I'm not sure, Ntokozo, if I've captured at a broad level as well your question, but if I'm thin somewhere, please let me know so that I can elaborate.
No, you definitely have, Chulu, and we're about to go into a break. But before we do, I want to bring Ben into it and just have him elaborate a little bit more on what you're saying. It's quite exciting and encouraging when you're saying you don't just bring people in support and then you let them go, but you kind of go through the process of making sure that it's actually something that's sustainable. And you made me think of, one of our clients and SMEs that we're helping, Fizz Made, which kind of, is in the similar space where it's like they are trying to service their communities who would otherwise struggle to have access to pharmacies. So what they do is to ensure that people are able to get to their medication. So I would assume those are also the kind of services that you are speaking about, becoming accessible in the rural and township areas. So Ben, before we get into the questions, I'd like to bring you in here. Obviously, the entrepreneurs we have on call understand the solutions that you're talking about, understand the kind of investments that you're trying to make, but it's not all the entrepreneurs that have the skills or the knowledge to be like, this is what I need to do to be able to access investment from the likes of Alt Capital Partners and so on. What is it that you are doing as Alt Capital Partners in a more detailed manner to support investors or to support entrepreneurs really become investor ready? Because I'd assume there's a lot of entrepreneurs with great ideas, but perhaps they're not ready, investor ready, or have that pipeline that Tumi was talking about earlier to really make that difference in their communities.
Yeah, thanks, Ntokozo. Very loaded question. So let me start from first principle of entrepreneurship to say, I guess one needs to have clarity in terms of the problem that you're trying to solve. So when Tumi and Chulu and I got together, we called our fund Reimagine, because at the time we were, I suppose, looking at the world in South Africa in particular and saying that as South Africa, we're sitting with the highest level of inequality in the world as measured by Gini coefficient. We're sitting, as you alluded to earlier, with very high unemployment levels. And thirdly, I suppose we needed to do our part, as the president called for, to say, how do we contribute to stimulating growth? So I'll say that was high level the problem that we are trying to solve, right? And then secondly then is to assess, what are you working with? So one is a point that you touched on, which is access. So from a capital perspective, you could argue that the way the capital formation in South Africa to date has worked has mainly benefited, can I call it the listed sector? So if you look at the 11 trillion rands of savings and investments in South Africa, about 97% of those monies are invested in what we call the listed markets, and only around about 2 to 3% is actually invested in private markets. So if you buy the argument then that the economy of South Africa and its construct at the moment is not sustainable, and the presidency also talks about a reform that will catalyze growth, create diversity and inclusion so that more people can actually participate in the growth of South Africa over the next while. So I suppose we've been playing a role to catalyze, inform, debate, to see how we can improve access to capital. And to a large extent, I'll say the regulators in the country is coming to the party in terms of amending the Regulation 28, which is a regulation that governs how our pension fund monies should be managed. And then the second building block is what Chulu touched on, to say South Africa in many respects is two worlds, right? There's a developed part to South Africa, there's a very much undeveloped part to South Africa. So Mbeki, in his presidency, talked about these two economies that we find ourselves in. So from a property perspective, is just to recognize that our built environment up to date still carries apartheid special legacy planning issues. So is what Chulu was alluding to say, how can we better the lives of people? So we believe we can better the lives of people by addressing the problem of them having to commute 20 kilometers, 30 kilometers to the places of employment and having to come back, and lots of money clearly gets lost in transportation. Quality of life is affected because a lot of the workers have to get up at 4 in the morning and they come back late at night. So that dynamic does contribute a lot to the social ills that you touched on earlier. So we talk then about using our expertise to bring the economy to the people. And in so doing, we hopefully addressing some of the social ills and improving the well-being. And then the third aspect maybe to touch on is what Chulu also touched on, is to say, part of bettering the lives of people, it is a lot about education. So property in many respects, I guess, is an asset class that people probably understand in pockets, because a lot of the people that I speak to, I mean, property involves the builders, the quantity surveyors, the architects, civil engineering, electrical engineering, facilities management, property managers. You know, I mean, there is the marketers. So there's a lot in terms of the value chain or the entrepreneurial opportunities that property exposes. I think actually a few years ago, SAPOA, which is a South African Property Owners Association, actually did a study to understand the contribution of property into South Africa's GDP. And I think property contributes well north of 10% to the GDP. So you can then understand that there are actually many opportunities that are available for entrepreneurs in the value chain. So we do that then firstly by educating it. So Chulu touched on how the process that we educate the landowners, but we also then go further because we would also like to bring a sustainable solution to how people can create wealth. Or put differently, we are saying that the current construct of our economy, where 10% of the population is contributing, I don't know, over 95% of our fiscus in terms of tax collections, or 50% of the population, which is a lot of people, is actually pretty much at marginal living standards in terms of poor or huge reliance in terms of social grants, etc. So I think our proposition also offers an opportunity to just finding sustainable solutions to ownership. Our shopping centers are expressions of how entrepreneurs can take their products or services to market. And even though we work with both the nationals and the locals, so in how we mix the tenants in our propositions, we're always mindful that we promote gender, we promote youth employment, we, to a large extent, manage a lot of the environmental issues that Chulu touched on, issues of energy, water, material, biodiversity, to just ensure that we grow our economy in a responsible manner so that we can all leave, I suppose, the country and the world a better place from our activities as opposed to not. So it's called Reimagine because we are reimagining a different way of actually bringing the economy to the people and bettering the lives of people.
No, that absolutely makes sense. That actually makes a lot of sense to me, where it's no one is being left behind and actually dealing with the different pockets of whatever issues that we might have. So we've reached the halfway point, and I see we do have some questions that have come through. One question is from Guy Harris, so I'm not sure between the three gentlemen who's going to take it. But Guy is asking, why does Africa have so few real angel investors and real venture capital companies, not PE, trying to, and I'm guessing that's private equity, trying to be politically correct. So to say, VC, but apply PE criteria. How do we access any of those then real venture capital companies that do exist? So I think this is a two-part question. The first being, why does Africa have so few real angel investors and real venture capital companies and not private equity companies simply acting as venture capital firms? And how do we access any of these?
Okay, maybe let me take a step at it. It's a very good loaded question. Let me maybe start by the physical market first to say, unfortunately, the education system of South Africa is designed to create employees, okay? So our education system, including our tertiary education, is not really designed to create entrepreneurs. So entrepreneurship then, I guess, is something that we are evolving to, developing, etc. And I'll compare that with Nigeria as an example, where I'll say that system actually generates entrepreneurs, and entrepreneurs are generally what's required to really drive economic growth and development. So to then get to the question specifically, I'll answer the capital aspect of it first. So I said earlier that out of our 11 trillion rands, which excludes banks, so this is just looking at savings and investments, and it's a lot of the capital to support businesses and entrepreneurship. 97% of those monies have been previously or currently and previously directed towards the listed markets. So in other words, South Africa, through its conservative prudential guidelines, has mainly supported the main businesses, whether in mining, industrial, or consumers, to, I suppose, drive the economic development thereof. And our pension funds, as the main providers of this capital, have been, to a large extent, maybe conservative, in terms of not quite understanding the risk and return profiles of venture capital or private equity for that matter. That's why the allocation to date has been around 2 and 3%. But over the last couple of years, organizations like the South African Venture Capital and Private Equity Association and many others have been through a process of educating not just the trustees of pension funds, but then also the asset consultants have also been investing a lot of energy and effort in terms of understanding this asset class. So all those initiatives, I'll say, have resulted in government proposing the current amendments to Regulation 28. So, okay, that's the second thing. And then the third thing then is to say, because South Africa hasn't really then had a culture of entrepreneurship, it basically means that the private businesses have mainly been supported by family offices, high net worth individuals, as opposed to institutions, or the institutional involvement has actually been quite small. So the reason we have few angel investors or the VC culture is only emerging is because I suppose it takes time to build balance sheets for private individuals, family offices, etc. And given our history, I guess the people with balance sheets have been the previously advantaged segment of the population. So we are then sitting in that pivoting area where there's definitely recognition that to grow the economy in a sustainable manner, we do have to support entrepreneurship. Government needs to provide the appropriate policies to enable that. Institutional capital needs to come to the party in terms of providing access to capital so that we can support entrepreneurship. And I think, I'll bet that between now and the next 10 years, we'll definitely see an increasing culture or increasing monies in venture capital and angel investing as sophistication and education actually increases amongst the value chain. But it's a process, like most things.
That makes sense. And for me, I think the second part of the question was around, why is it so hard to access that capital? But you have explained that. Another follow-up question we have that I just got in my WhatsApp is around the question of trying to encourage corporates to work together with venture capital firms to drive transformation within the venture capital space. Do you gentlemen have any thoughts around that, of driving venture capital and encouraging corporate firms to work with other stakeholders to drive venture capital to those entrepreneurs who, might not have that strong balance sheet, might not have that backing, but definitely have solutions that will help take the country forward? Do you think there's room for transformation agenda within venture capital funding?
To say that, unfortunately, it does take money to make a difference. So if you look at it in the context of South Africa, to say the institutions that were early in formalizing savings and investments, being the live companies, to a large extent, I'll argue that they've done a lot in terms of stimulating private equity, infrastructure, property, and economic development in a country. The banks have also been quite active, but then there are balance sheet constraints. But where we find ourselves now is exactly where the question is placed, to say the people with balance sheets are the corporates. So corporates do then have a responsibility of promoting transformation and empowerment by partnering, I guess, with small empowerment businesses. And within the property sector, there's been a few examples of how some of the big REITs have actually created structures that actually partner with smaller businesses to drive transformation. But like most things in life, you need to invest the time to create your own brands, make sure that you've got appropriately skilled people within your business, market so that everyone knows who you are, demonstrate a track record in terms of, in our case, raising capital or originating opportunities. And once you're dressed up, I suppose, appropriately, there are opportunities and for corporates to partner with the likes of ourselves to promote their own strategic agenda. So I'll say it's probably a trend that I expect to see more and more companies effectively embarking on over the next couple of years. I don't know if you've got more to add there.
I think just to make it a bit more complex for ourselves, the likes of ourselves, is to say, of course, the corporates do have the responsibility, but I guess those of us who are then fortunate enough to cross over that line and get to the other side, the responsibility on us is perhaps even higher, to make sure that we are taking people along at the same time. So we understand the journeys that we've walked to get to where we are. And once we are the other side, as I'm saying, not to close the door, but literally take the ladder down and take people with you. So, I mean, I speak from experience here in that Chulu in particular has been in the big bad world for the last probably 8 years or so. So he's got proper experience in terms of what it takes for corporates, institutions, banks, etc., to take you seriously as a small business who's looking to do something actually very, very big in a market which isn't traditionally catered for people such as yourselves. I mean, our competitors in the space are large listed businesses predominantly. you sitting here with three guys, effectively with a small business currently in fundraising, and we're competing with institutions who've been there for a very long time. I mean, some of our competitors have been doing a significant portion of what we're doing over the last 30 years or so. So it's a very, I think the challenge is there, but more so, I'd like to extend the challenge to the likes of ourselves as well, to say, once we've passed that, do remember the journey that others do have, and where we can assist, where we can send down the ladder or the elevator in this instance. We must never forget that.
And Tumi, I mean, while I've got you back on, I don't see any more questions that have come in the chat, and I'm just watching time. So I think we can continue. Let's circle back to reimagine, and something that I actually might believe is or might be a bigger challenge than actually getting, entrepreneurs investor ready, but it's actually pushing the ESG agenda of making sure that we take care of the environment. The businesses that do come up are also environment and sustainability focused. So how do you keep yourselves accountable in terms of that verified ESG impact?
Thank you very much for that. I think what's very interesting in this conversation is we've touched on effectively all those elements, right? So without even being pushed to go in that direction, we've already touched on them. Chulu spoke a lot about how we think around environmental issues around specific developments in township, rural areas, etc., which are to a great extent underserviced. So that contributes obviously to the environment in a great sense. We spoke about, during the course of the conversation, we spoke about rural development or community development, in how we bring in people along and creating sustainable work and livelihoods, etc., in those areas. And then the last thing, obviously, within the ESG framework is governance, which then talks a lot to the more boardroom stuff, if I can call it that. So how are we thinking around building the team, how our board processes, how our policies, and all of those things that make us and keep us in check, I guess, in terms of what we're looking to do going forward. What's important for us is in building our policy specifically around ESG is it needs to be relevant. It needs to be relevant to the market that you're participating in. So when we started thinking around how to do this, we obviously looked in the market to see what other people are doing and what other people are saying, but we needed to filter it to be very relevant to our own area of focus, but it also at the same time needs to be comparable. So in order to hold ourselves accountable, we need to be able to compare ourselves to other parties in the market who are doing similar things, and at the end of the day, to say they've achieved X, how have we tracked according to those fundamentals. So I mean, the things that we do keep a very close eye on, obviously, the sustainable development goals. So as we look at framing our ESG policy in totality, is how are all the elements that form part of our ESG contributing to the sustainable development goals. The UN PRI is a function of that. The African Union also has other elements, but in the context of the market that we operate in, being South Africa as well, there's all sorts of other things that we then need to take into account to become a lot more relevant to our communities and to our areas. I mean, Ben mentioned the inequality in South Africa, and we haven't even spoken about the unemployment levels, which every time Stats SA announces our unemployment level, specifically within youth unemployment, I mean, now we're reaching stratospheric numbers, which are scary. So how are we contributing towards the employment creation, small business development, etc., which is very important to us. So in our value chain, because the sector that we operate in has so many different disciplines. I mean, Ben mentioned them a bit earlier. They've got so many different disciplines. Ultimately, there are many opportunities that you can affect. Employment creation, you can affect small business development, etc., specifically when we're looking at the economic side. But ultimately, the aim, the onus is on us as a manager, of course, to hold ourselves accountable Our board holds us accountable to that because it is becoming quite a big topical issue. Investors, on the other hand, are also holding managers accountable, asking the questions up front. What is your ESG policy? How are you looking at it? How are you incorporating ESG in your entire investment decision-making process and post-investment? How is that? How are you measuring and keeping yourselves honest? So I think investors to a great degree are driving that conversation. We're starting to see, a lot of international investors have been on that bus, if I can call it that, for a while. We're starting to, we hear it in a lot of conversations that we have with potential investors into our fund. It's one of the key topical issues that they're asking about. And when you look at any listed businesses these days in the property space, a big portion of their results announcements will be placed on ESG. What are you doing for communities? What are you doing for the environment, et cetera, et cetera. So it's a big element, which is quite easy if you're talking just about financial returns to push to the wayside and say, yeah, we'll look at it afterwards, right? So we need to deliver solid returns because that's what investors are interested in, right? And then we'll do the other stuff. I think that's the easy answer. It's not easy to deliver solid returns, but it is the easier answer than to do both. But if you listen to the way the conversation has been driven, I think it's quite clear to see to anybody that it forms part and parcel of our day-to-day thinking in how we put together our proposition and how we think about investment long-term. So it is financial returns, economic returns, and ESG in totality is who we are, is a core function, is a core part of who we are. And hopefully that the goals that we do set for ourselves, we've set quite ambitious targets for investors. So hopefully the goals that we've set ourselves over the life of the fund, which is obviously 10 years, we'll be able to sit on the other side of that and say we've achieved to a great extent. Well, if we don't do that, our board and Ben, they will beat me up, because from an executive point of view, I look after ESG. So we take it that seriously as well, that it's placed in the CRO's office at this point in time. So yeah, hopefully I've covered to a broad extent. Yeah.
And Chulu, just kind of winding down a little bit into those long-term goals and long-term strategy that Tumi is talking about, there is no question that the last 2 years have obviously been challenging world over, and I'm assuming you weren't all the way out there in the big bird world as you usually are due to COVID. Have you had to par down any of your expectations and just, sail your strategy a little bit in a different direction over the last 2-3 years? Or as Tumi said, is that diversification in your different disciplines allowing you to really go headstrong with the ambitious goals and the ambitious strategy that you have?
Yeah, thanks, Ntokozo. I think we've had to think about how we do business. And as Tumi has mentioned earlier on, pretty much looking from a pure brick and mortar development perspective and investment into these assets in these areas that were affected, is that we've had to kind of look in terms of how we deal with the design of some of these buildings that are coming up. Because if you actually think about it, most of the buildings that were ransacked are the ones that had open parking area where people were effectively able to access them quite easily. And the stats show, and the ones that had a kind of a mall effect where you had brick wall on either side, those were not as heavily affected as the strip centers. So obviously we need to take those things into account. That's number one. We haven't tapered down in terms of our ambition. In actual fact, it's been the other way around. We, for some reason, had the drive, and I guess it also has to do with the whole years of preparation for such moment, because in chaos there's always opportunity. And the way, as the guys have said, the way we are wired is that, yes, it was quite a hard time for everyone to sail through, but in that hard time we're able to find that grit in order to find more opportunities there now that can be quite a niche pockets for us to quality exploit, which are still within the realm of rural retail that we're looking at. So we've managed to find a couple of those which became gems, and obviously some of them became available because some guys were heavily burnt, and that has to deal with the people element of the relationship that were created over time. And I think Ben spoke to this, that doesn't happen overnight. You need to build that thing over a period of time in order for you to be able then to tap into these to these networks and the likes at a later point. So we've had to rethink in terms of how we deal with certain matters, but it hasn't fundamentally changed from what it was before. I think it has been enhanced, and it made us much more resilient, and it made us much more to actually see that, listen, if we're able at least now to know in terms of streamlining certain functions as well in our thought processes. And then also just tying up to what Tumi has said as well. I mean, he mentioned in terms of the stakeholders on the governance, the people that hold us accountable. What it showed us is that your major stakeholders in the community that you work in. Yes, you've got the board and all those guys that deal with paper and all of that, but your biggest asset, if you may put it that way, is the community that you operate in. If that community can be able to say, I can sit down and have a coffee with Ntokozo, and Ntokozo is not going to say, hey, I need to get back to my air-conditioned office in Sentin, wada, and all of that, and be Ubuntu, basically, have Ubuntu. We actually found that it allowed us to have access to more opportunity, have access to more goodwill that comes out of the communities. And hence, we're able to say, we were able at least to keep our sales, as much as there were a bit of a murky waters, in order for us to at least post, where are we now? It's 2022. Post the 2-year period, we can be able to comfortably say, listen, the projects that we had prior to COVID hitting, actually they're much stronger now. We're in a stronger position, and we just need to execute those. And it brought us closer to that. That's number one. Number two, yes, you need to have the local community as your biggest trench hold, but also the municipalities, which is something that we deal with personally. Whereas I would say comfortably, because I also, in my previous lifetime, is that we personally go into these communities ourselves. We're not ghosts that come in at night and no one knows who they are and what they don't look like. And those are the sort of things that have helped us in order for us to tap into more opportunities, to be able to then align our thinking in terms of what's happening on the ground. How do we re-strategize in aligning the product that you're trying to put to market to be able to meet the needs of the people on the ground? I think that answers your question.
So really going back to basics of Ubuntu when it comes to digging those opportunities in rural and township communities. And that makes absolute sense to me, Chulu. Ben, you perhaps just quickly take us through Bayeka and its mission in regards to economic infrastructure development and where that from Reimagine and the different disciplines that it focuses on.
Yeah, thanks, Nto. Yes, so the Bayeka team, I guess, with the Reimagine team, is all tied in, I guess, in terms of the big philosophy of making an impactful difference. So, as an example, we all been going through load shedding. I'm surprised we haven't suffered it yet during the process of this interview. And I think what this load shedding has highlighted is that without a sustainable, reliable source of energy, it does become a roadblock to economic development. So as we're thinking green and sustainability or renewable energy, it's all bulk infrastructure that the government has also recognized as one big priority to address. So the Bayeka team, in terms of its mandate, is to do bulk renewable energy, wind, solar type of projects as investments. And then water is another one So if we just rewind to what Kulu was saying in terms of finding land in rural areas where communities are very remote, but to have access, you need roads, you need water, you need energy. So that mandate for Bayeka then is effectively to capacitate the infrastructural investments that are required to catalyze economic growth and development. So yeah, so we tight in relation to the philosophy, and we tight in relation to the impact that we're trying to achieve.
Looking forward over the next 5 years, just as a closing word on kind of, the projects you're looking forward to working on, but also just kind of the entrepreneurial journey for a lot of guys that do operate in the township and rural areas. What are some of kind of those, key tips you could give them on how to kind of move to the next step of being investor ready over the next couple of years?
From our side, I mean, as Tumi has mentioned, it's 10% of something is better than 100% of zero. What I've picked up, at least in my entrepreneurial journey, is that never be too greedy, especially if you don't have the capital. Yes, you must negotiate. However, you need to look long term. A lot of guys that we're meeting are guys that are effectively not necessarily having an investment product ready. However, they're just looking for cash. Get R1 million today, tomorrow it's gone. Tomorrow there's 150 million rand asset that's standing there that's creating annuity income in perpetuity. So you just need to have the grit. I mean, a person like myself, I've gone through the highs, the lows, I think, Tumi hasn't mentioned, I think this is the third or fourth business that we've tried. We made a lot of money, we went bust, we came up again, and it's a cycle. But the lessons have been, in actual fact, if you start looking at how these successful guys have actually made it and you study them well, you'll find that, and I've worked also with corporates that understand, to get a better understanding in terms of how they actually became so wealthy. Start getting better understanding that they've got 5% here, 10% here, 15% there, whereas most entrepreneurs are so emotionally attached to their products, rightfully so, by the way, if you've walked the journey. But there needs to be a time where you realize that you need someone, you need a, what do you call it, a midwife, to be able to help you give birth to this thing. And I think between the three of us, we've realized somewhere in our journeys that we needed a midwife to be able to help us breathe, help us, go through the motions. And I think that the one thing is 10% of something is better than 100% of nothing. So, but you need to be resilient. You fall depressed for a couple of hours a day, whatever it is, but don't be depressed for long. Move on.
So don't be greedy. 10% is better than nothing. And diversify. Also, don't get too emotionally invested in what it is that you're building. Yeah. Thank you, Kulu. Tumi, any parting words for our entrepreneurs on the call with us?
I'll just add one final point to that. I think Kulu covered a lot of it. I'll just add one final point, is that there's a saying that says, if you want to go fast, go alone. If you want to go far, go together. I think what I've learned over the last 5 years, not being within a corporate environment, is the people that you work with matter. There's many to the power of infinity dark days in an entrepreneurial journey. And if you're going at it alone, it becomes even more difficult. I've tried it. I'm speaking from experience. But on the other side, I mean, having a team of people that you work with on a day-to-day basis who are like-minded in what they're looking to achieve, but who also bring vastly different experiences to the conversation and vastly different networks to the party, and obviously a skill set, is very valuable in my opinion. So I think the one thing is look to invest in, even if it's not a team that you work with day to day, but a council of people that you can tap into on a regular basis. to help you build a sustainable business long term. I mean, all of us are in the business of long term, right? And long term includes cycles. And when we hit the bottom of those cycles, or rather, the opposite of that is that when you hit the top of those cycles and you're doing very well, you also need to be at a place where you think rationally, and you're not doing things that could effectively end the sustainability of the business as well. So I think the team is a critical element, and team is how you see it. From me, I see the core team that I hear today. There's also a portion of our other team which is not on the call today. There's also our board, which is not here today with us as well. Over and above that, we've got a whole bunch of people that we are able to tap into, who are able to walk the journeys with us, including our families. I mean, I think we sometimes forget that our families are walking with us through the good and the bad. What Ben, the two guys on the call have certainly shown me is how much they involve their families in our journeys, which is different to the way I have approached things in the past. But I think as we walk the journey, they're teaching this old dog some new tricks. I don't know if I'm taking them, but they've taught me one or two new tricks.
That's definitely important. Ben, any last word for us?
Yeah, I think my partners have said it all. So I don't know, I'm just left with blessings. So I'll just express my blessings to say, I guess in life, if you've got a privilege of working with very competent, self-driven people that are committed and bring the wholeness of their being, is such a privilege. So it's been such a privilege to walk the journey with Chulu and Tumi. And yeah, we have our serious conversations, we have our hard conversations. We still have to get Chulu a suit or a jacket, because he says all he needs is fell scoons to walk the land, and and our ladies as well. So I guess in terms of characteristics, I'll say, yeah, we're blessed to have very competent people that are self-driven. We value diversity, inclusion. We work on belonging, because we do work on creating a family. Why? Because life is a cycle. So we celebrate together with our wins. We there for each other in our downs, and all that as an ingredient creates something very special, where I actually believe, yeah, we can do amazing as ordinary people, because it's all about people. So not just the ones you work with, the ones that you work for, the communities, the investors. So the whole, I suppose, network of people that touch our lives. So I'm absolutely blessed to have amazing people. So I'll end with that. It's about people.
Thank you so much, Ben. And unfortunately, we have come to the end of the session. Honestly, for me, I found it quite informative, quite engaging. You guys really explain things in a way where you get rid of some of the jargon. Because I think especially for a lot of entrepreneurs that come from rural township backgrounds that are trying to make it, one of the biggest issues is the jargon that is used in the space. So thank you. For me, this was really, really insightful. And I trust that for the entrepreneurs that were on the call, it was just as insightful for you. I will be clipping this into little shorter clips, just to make the information a little bit more digestible. So over the next couple of weeks, do look out. We will be sharing the playback. We will be sharing the clips in shorts and little videos. On the 26th of May, I will be chatting to Newtown partners. They focus more on tech startups. So if you have any friends or people in the entrepreneurship ecosystem who are in the tech space, please do look out for that link. Otherwise, look out for this interview playback, and I think you definitely would want to share it with other people who may have missed it. It was very informative. With that, thank you so much, Ben, Tumi, Chulu. That's it for me, and we will see each other soon. Thank you.